Hello everyone, I hope you're all doing fine. In today's session, I will be taking you through the questions on IAS 16 related to the topics which we have discussed so far. So those topics include initial recognition, including providing provision for the decommissioning cost, and also we will be going through some aspects of the revaluation. Now in this session, I will also be providing you exam related tips that you can use to help make the understanding of the question easier, which will also make spotting the answer in a very efficient and quick way under exam situation. Now these questions are F7, which is financial reporting standard level. So hopefully this session would be helpful to you, and let's try to do these questions together. If you wish so, pause a video before starting any question and then try to match the solution with my solution to see how much of that you got it right. Alright, so let's start together. For each of the following costs incurred, determine whether it should be capitalized as part of the warehouse cost or expensed as a period cost. Now notice how I'm reading the requirement first. And the reason behind reading the requirement is because once you read the requirement and then go and try to read the passage, your brain will be automatically wired to finding that particular solution from the scenario. In this way, you will be more in directed way to recognize what you want from the passage. All right, so let's start. Under IAS 16 property, plant and equipment, an asset must be initially recognized at its cost in the financial statements. Our company ZY Limited constructed a new warehouse for its own operational use, using both internal staff and external contractors. And we should be now finding which of these costs should be capitalized. So let's look at the cost number 1, which is the cost incurred to prepare the land for the construction. What do you think? Should it be capitalized? Of course it should be capitalized, because if we do not have the land for construction, which is unprepared land, how will we be able to do the construction, right? Fees paid to the professional surveyor overseeing the project. Capitalize, yes, because without their expertise, we would not be able to have a fully planned project. All right. Salaries of ZY Limited's employees involved directly in construction. What about this cost? Yes, it will be capitalized, because this is the cost that is being incurred directly related to the construction of the warehouse. So without again the expertise of these employees, the construction will not be possible. So the cost associated with this should be capitalized. All right. A portion of ZY Limited's general administrative expenses based on the time spent. These are simply the overheads that are related to business's admin expenses and therefore has nothing to do with the construction of the asset, and thus this cost should be expensed. Hopefully this is clear. The takeaway from this is that all those costs that are going to be directly incurred in relation to that asset in terms of bringing it to its working condition or location has to be capitalized. All right, so all those directly related costs should be forming part of the cost of the asset. Let's move on to question number 2. For the year ended 30th of June 2005, what is the total expense recorded in the statement of profit or loss related to decommissioning? Now this is a very important requirement. Let me get my highlighter. All right, so this is a very important question that has 3 set of very important requirements. Number 1, the year end is 30th of June 2005, and it is asking for the total expense which has to be recorded in the statement of profit or loss. Now the reason why it is crucial to have this as keywords is because sometimes students in the exam room will also try to calculate the figures that have to go in statement of financial position, and in this way they waste a lot of their precious exam time. So therefore you must always either underline or highlight such key requirements so you can remind yourself that you have to stick to this requirement and not divert and calculate things that are not required by the question. All right, so we are just supposed to be working towards the total expense, and we will try to stick with that. Now let's try to read the question. On 1st of July 2004, a company, Alpha Industries, opened a chemical processing facility. The plant is expected to operate for 5 years, which is the useful life, after which it will be decommissioned on 30th of June 2009. At start of operations 1st of July 2004, the estimated decommissioning cost in 5 years' time was 4 million, and the company determines that the appropriate discount rate for present value calculation is 12%, and the corresponding discount factor for 5 years is 0.567. So the very first thing which I will do here is to draw a timeline. So this timeline is going to be related to the year end. What is the year end for the company is 30th of June 2005. So which means that the start of the year must be 1st of July of 2004. All right. On 1st of July 2004, what did the company do? They opened a chemical processing facility, and the plant for the decommissioning cost of the plant on this date, all right, the decommissioning cost on this date, which was expected to be incurred in 5 years' time, was how much? 4 million. And what is this? This is the future value which has to be incurred in 5 years' time, and this thing was recognized on 1st of July 2004, that this is the time, this is the cost which we are expecting to incur in 5 years' time. So this is the future value. Now we all know that decommissioning cost always capitalized to the cost of the asset. So in order to calculate the present value, what we will do is we will take the future value and multiply this with the discount factor. Now I am doing all of this calculation that is related to 1st of July of 2004, and that is the reason why you see systematically I'm putting this calculation under the heading of 1st of July 2004, because this is all happening on this particular date that we will recognize the present value. All right. The present value will be as follows. The future value is how much? It is 4 million, and you will multiply it with the discount factor, and once you put this into your calculators, you will obtain the answer as $2.268 million. This, what is this? This is the present value of the decommissioning cost that will be capitalized to the cost of the asset, but it is not an expense. All right, it is not an expense. The expense, do you remember what will be the expense? How will we be incurring the expense related to this decommissioning cost in this particular year? Can you remember what is that concept? That concept is known as unwinding of the discount. The unwinding of the present value will happen at the year end, and what we will do is we will take the discount rate and we will multiply this with the present value. What is the discount rate? The discount rate is 12%. You will multiply it with the present value of 2.268 million, and once you will put this into your calculator, you should find that the answer will be 272,160. This is the finance expense that will be recognized in the profit or loss in relation to unwinding of the discount on this present value. All right. So your answer will be 272,160. I hope this was clear to you. Drawing the timeline in this sense will always make the question navigation a lot easier. All right. Moving on to question number 3. Which of the following statements regarding the revaluation model under IAS 16 is correct? Statement 1. If a company applies the revaluation model to property, plant and equipment, revaluations must be conducted regularly to ensure that the asset's carrying amount is not significantly different from its fair value at the reporting date. This is true. As we have discussed, IAS 16 says that the revaluation must not be one time. If, for example, at the end of the reporting period, we see that the fair value of the asset is materially different from the carrying value, we have to take that revaluation at that particular period. All right. You cannot have a choice in this regard whether you want to revalue or not revalue. You must revalue to ensure that the carrying value is reflecting the fair value of the asset. All right. So revaluations must happen. So statement 1 is true. What about statement number 2? When a company revalues a particular asset, there is no requirement to revalue all the other assets in the same category. This is false. The reason is IAS 16 says that you cannot cherry pick the assets, which mean if you are revaluing a machinery, then all the machineries that are existing in the same class also have to be revalued. You cannot specifically revalue one asset in the class and leave the others. You have to revalue all the assets that belong in the same category. So which of the statement is true? Statement 1 is true, yes, so we will take it as true, and statement 2 is false. This was a very simple theoretical question. Let's move on to question number 4, which seems to be like a heavy calculation based. Let's just try to first read the question before reading the passage. What will be the value of the office building shown in Mount View Limited Statement of Financial Position as at 31st March 2005? What is it asking? It is asking value of the office building which will be existing in Statement of Financial Position as at 31st of March 2005. So there are three important pieces of information. We have to calculate the value. It will belong to Statement of Financial Position, and what is the year end? 31st of March 2005. All right, so forget about the passage. Let's try to draw the timeline. If for example the year end is 31st of March of 2005, then it means the start of the year would be 1st of April 2004. And let's just try to read the question now. On 1st of October 2004, a company, Mount View Limited, purchased a new office building, and the initial carrying amount was as follows. All right. So, on 1st of October means it must have been somewhere around here. On 1st of October of 2004. What is the event that took place here? The event was purchase of a new office building. So purchase happened at this point. So within the new office building, we have some other items, that is land, building structure, air conditioning system, which gives us the total carrying amount as 16 million. The estimated useful life of the building structure and air conditioning system are 25 years and 10 years respectively. So what I will do here, just simply put this down as useful life, and we are going to be having building structure is 25 and air conditioning system is 10. When the air conditioning system reaches the end of its useful life, it is expected the system will be removed and sold for 500,000. This is the residual value. This is the residual value of the air conditioning system. So what I will also do is, let's just try to work smart. The residual value of the air conditioning system is 500,000. All right. I'll be putting it 500 because this is already quoted to thousands. So 500. Let's just put 500. Depreciation is applied on time apportioned basis when applicable, which means it is following a straight line method where the cost is going to be distributed across its useful life. What is going to be the value of the office building? So when it says value of the office building, it is talking about values of all of these three components that together make the value of the office building. Now notice how at the start when it was purchased, the carrying amount was 16 million. All right, and now it is asking the value at the year end, which means from this timeline all the way to the year end, we will be accounting for the depreciation. So can you quickly tell me how many months does that make? So starting from October, November, December, January, February, March, this makes a depreciation worth of total of 6 months. So we have at least got some information in this way. 6 months of depreciation will be charged. Now, on what elements within the office building will take the depreciation? Land is not depreciated. The reason why, because it has indefinite useful life and does not have wear and tear just like other assets, so it will not be depreciated. Building structure will be depreciated across the useful life of 25 years. So let's just try to calculate the depreciation on the building. All right, let's just try to move on, because now we have understood the components of the question. So now it will be becoming a lot easier. So depreciation, number one, who will take the depreciation first? Let's just try to calculate on the building structure. On the building structure, the depreciation will be the initial cost, which is going to be 10,000. All right, and what is the useful life divided by 25 years. And once you do this, what you will get, 10,000 divided by 25 gives you 400 of depreciation charge per year. But notice how, what is the total time period? It's of 6 months. So you will now make the adjustment. It will be 400 divided by 12 multiplied by 6. And once you do this, you will come to know that depreciation is $200, which you will have to charge. And what will happen now? Therefore, the carrying value of the building will be how much? 10,000 minus the 200. Once you do that, you will find that it will be 9,800. So we have got one answer correct. Let's just quickly move to the air conditioning system. I will simply put this as AC. And what is going to be the depreciation charge? It will be the initial cost, which is 4,000, all right, minus the residual value, which was 500. Notice how in the building structure we did not have the residual value. We will assume that it did not have any residual value because the question did not tell us. So you move with this assumption and try to work with the numbers. So 400,000 minus the 500 divided by 10. This will give you a depreciation charge per year of $350. And notice how again it pertains to a full year depreciation. So you will charge for 6 months as follows. Excuse for the squeezing numbers because I'm out of space. So it will be 175, which will be a depreciation charge for 6 months. Therefore, the carrying value, let me just put this in black, carrying value of AC will be 4,000, all right, minus the 175, which gives us 3825. So 3825 is going to be the carrying value of the air conditioning system. So what is going to be the value of the building? What you will do now, I will write this here, value of building. I'm out of space, so I'm just squeezing. Hopefully you are understanding what I'm trying to do here. Value of the total office building. You will take the value of the structure, which was 9,800. You will take the value of the AC system, which was 3825. And because land is not going to be depreciated, it will stay at the same value at the year end of 2000. All right. So the land was 2000, you will carry, and once you will do the total, you will find out that the total value of the office building will be 15,625,000. So as for the option, which is the correct answer? The correct answer is going to be option number A. This is your answer. All right, hopefully that's clear. If anything is not clear, please put it in the comment box below and I will try my best to help you out. All right, so let's move to question number 5. The following extract is from the trial balance of Vuitton Limited as at 1st of April 2004 for the property that it owns. Oh, I forgot to read the question. All right, so let's read the question first. What will be the depreciation charge in Vuitton Limited statement of profit or loss for the year ending 31st of March 2005? Again, very important, we are supposed to be working with the depreciation and we are supposed to be working it in the statement of profit or loss. So that is our only concern. All right, nothing to do with the statement of financial position. So let's just try to draw the timeline. How will the timeline look? It will look like this. So if the year ended is 31st of March 2005, the start of the year must be 1st of April of 2004. So let's read. The following extract is from the trial balance at 1st of April. So property at cost, which we have the original life is 20 years, the property is at 12 million. Accumulated depreciation as at that point is going to be 3,600. All right. On 1st of October 2004, due to a sustained rise in property values, Wheaton Limited revalued its property to 10.8 million. So the revaluation must have happened somewhere here. This is 1st of October 2004, and what even took place at this point was the revaluation. All right, revaluation has happened. All right, now in order to know the depreciation charge for the full year, you must understand that the depreciation charge must have taken place from 1st of April all the way to 1st of October, which is up until date of revaluation. And then once the revaluation occurred and the value of the asset had changed, we would have charged the depreciation on a completely different amount. So here, the most important thing to understand is that the depreciation is going to be charged on two different values. So what I'm going to do is that I'm going to be calculating the depreciation from 1st of April to 1st of October before revaluation occurred, and then on the revalued amount we will calculate the depreciation from 1st of October to 31st of March of 2005. So from October to 31st of March we will have a period of 6 months, and that will be from 6 months as well. So in order to calculate the depreciation, you will work as follows. The depreciation will be simply, I will take what is the total initial cost, which is 12 million, and I will be dividing this by the total useful life of 20 years, and I come to know that the depreciation charge per year is going to be $600. Now notice how as of 1st of April we have an accumulated depreciation charge of 3,600, right? And this is a very important piece of information. The reason why is because it tells us what is the remaining useful life of the asset at 1st of April. Now what is the remaining useful life of the asset on 1st of April? So what you will do is you will calculate as follows. What is the remaining useful life? It is simply that we know that the depreciation charge per year should be 600, all right, and the accumulated depreciation is 3,600, all right, which means there must have been some amount of years that have already passed in relation to that asset. What are those years? I want to know what is the remaining useful life on 1st of April 2004. I do not know what it is, because if I do not know what it is, I will not be able to calculate the depreciation per year on the revalued amount. It's extremely crucial. We have to know, if we want to calculate the depreciation per year on the revalued amount, we must know what is the remaining useful life on date of revaluation. So let's just even first calculate what is the remaining useful life at the start of the year, because we have just got the accumulated depreciation at the start of the year. So for example, we will work it in this way. If per year charge of the depreciation is $600, then 3,600 pertains to how many years? So this will be 3,600 divided by 600. This pertains to 6 years. So 6 years have already passed. Therefore, the remaining useful life will be 20 minus 6 years. It is 14 years. Do you understand this? The remaining useful life is 14 years. All right. And then at date of revaluation, what is the remaining useful life? Therefore, at date of revaluation, which is 1st of October of 2004, the remaining useful life is 14 years, which was the remaining useful life at the start of the year, minus how many months have passed? 6 months. So that makes it 0.5 years. The remaining useful life will be 13.5 years. It's extremely important, 13.5 years. So what you will do now, in order to calculate the depreciation charge on the revalued amount, we will take the fair value. The fair value is already given to us. Question is 10.8 million. That is the value at which the asset has been updated to. So depreciation on revalued amount will be for 10.8 million, which is already given to us here, that the property has in value 2, divided by the remaining useful life of 13.5 years. This will give us the depreciation charge per year. 10.8 divided by 13.5 is going to give us 0.8 million per year. But notice how we just want the depreciation charge for 6 months. So what we will do is we will take the 0.8 divided by 12 multiplied by 6, and that should give us 0.4 million. This is the depreciation charge which I will be taking for, oh my goodness, let's just make it lighter. This is going to be the depreciation charge on the revalued amount for the remaining 6 months. What about the depreciation charge for these 6 months? The depreciation per charge is 600 per year. So for that point, it will be depreciation on initial cost for 6 months will simply be 600 divided by 12 multiplied by 6, which will give me $300 per year. All right, and please, it's not $300, it's 300,000, because here it is taking the value to the nearest thousand. So I keep on saying 300, 600, but in fact it is $3,000 per year. All right, let me just put it this way, $3,000. So now finally, what is the total depreciation charge? The total depreciation charge will be the depreciation on the initial cost, which is this value. This will be, in terms of million, it is 0.3 million, plus the depreciation on the revalued amount is 0.4 million. Let me just write this for you here. This is the depreciation on the initial cost. This is the depreciation on the revalued amount for 6 months. All right, these two values are for 6 months. In total, the depreciation charge will be 0.3 plus 0.4, giving you a total depreciation charge of 0.7 million, which will be recognized in profit or loss. All right, finally we can take a deep breath, because there were a lot of things that were going on, but notice how these things are on the basic level, and you have to think deep. What is going to be the useful life, the remaining useful life, and how things are going to be worked in this way. But hopefully, I hope this was clear to you. All right, it's not difficult. Just try to go through this again and try to understand. If there's anything you don't understand, please let me know, and I will respond to you in a way that will make